Good evening, everyone. David Paul speaking. I'm recording this at 6:15 p.m. On Monday, the 16th of March. Unfortunately, GoToWebcast lost the video, so I'm in fact going to make a short and hopefully focused video of what I think is going on. We're looking at VectorVest USA. And I think most of you've got VectorVest UK. It's hasn't been updated at this stage, but as you can see, a very good day on Friday, and the floodgates opened again today with 7,000 of the American shares in the database on declines, miserable 600 advancing. So in the US, and we'll look at the UK in a second, but in the US, the buy-sell ratio, the number of shares on a buy divided by the number of shares on a sell, down at 0.02, and the MTI at 0.26. We're in a down situation, and although the market would seem to have got some level of stability after the fall, the trends on all measures on VectorVest still down. Those of you that want to in fact buy into shares at very lower valuations, well, my advice and VectorVest advice is to do nothing. Do not advocate buying stocks at this time is good advice. So let's have a look at what's happened. That was the gap down at the open. The market went limit down. It moved up, and now it's pulled back and trying, I hope, to beat out a bottom. So let's have a look at the UK market. I need to put up our disclaimer, folks. As you know, I'm not allowed to give one-on-one financial advice. I can speak about shares that I own myself, but I have to make it very clear that although those are suitable for me, they may not be suitable for you. So that said, the cornerstones of VectorVest, putting together fundamental analysis and technical analysis. And if I in fact go through to my PowerPoint presentation and have a look at VectorVest UK as per the close last Friday, we have a situation where only 50 shares are on a buy, 1,685 are on a sell, and of those 50 that are on a buy, most of them are highly illiquid inverse funds that we couldn't even buy into if we wanted to. So buy-sell ratio on its knees at 0.03, the MTI at 0.37. So all the metrics on VectorVest UK are down in exactly the same way as all the metrics from short term to long term are in fact down. So the advice, both sides of the pawn, is not to buy any stocks at this time. Very good advice indeed. A couple of weeks ago at the Traders Show, I had to in fact talk to a young man about not buying into the stock market at that stage because he felt it was cheap. Never buy into a falling knife story, folks. So that's the Composite UK. The market timing doing a fairly good job. As you can see, all the sell signals via the confirmed down last year came to virtually nothing, and then of course we get the big one that precipitates this huge fall. The price was rising, the MTI was falling, always an advance heads up, and the buy-sell ratio also making a falling top. That divergence a leading indicator of change. Now no divergence in either of these, and particularly the MTI, the price is falling, the MTI is falling, and that probably means more downside, or at least more time to go before we can get a decent bottom in. So one has to be very careful. My own personal view is that it's too late in this to short the market. It could certainly fall further, but I would suspect that we're going to rally first. I think the rally can be fast. Now, bear market rallies are very strong events, folks, and they can give the illusion of a new bull market, but I am going personally to bet that this is a bear market rally until it closes above 78% of the sell-off. if I see a close above 78% of the sell-off, or a couple of closes up there, then I'll be tempted to say that we've got a V bottom and the market is pushing well up the page. The Fed and the central bankers can certainly make that happen, although many of the economic commentators are saying that they're slowly but surely running out of ammunition. Never underestimate the Fed for sure. So it is my view that any rally will be fast and furious. It's my view that this, in terms of probabilities, is probably a bear market rally, and I will change that opinion when the market closes, and maybe a couple of closes above 78% of the sell-off. The sell-off has been fast and furious. The only sell-off that in fact was a higher in terms of percentage points and faster in terms of velocity was in 1915, when the Germans suspected that there was arms coming from America on the Lusitania, and they sunk the Lusitania in 1915. So that's the only other time in the history of the stock market that the velocity of the sell-off has been this fast. So that's the DEW, also down, no divergence on the DPO. And that's the composite, and I think we've probably taken this level out today. Let's see if we can hold around these levels. Since I've done this, I was looking for some form of bottom in the pound. That didn't come today, so I need to look again. I'm waiting on that. Today I've seen a little bit of a bottom in the euro, so I could be tempted tomorrow, if it finishes like this, to actually buy a little bit of euro. Last week my trade was short the euro, but I think the euro looks strong again. So what should we look at? Well, folks, I don't think that you need to look at anything more than the high RS stocks that have sold off in this rally. If it is a rally, it could be a V bottom, but the probabilities, I think, favor a rally in a bear market. And I myself will be, in fact, buying into shares with a good track record of making money, that can handle a couple of months of really, really bad business. And any of you that are in business will know that it takes a very long time to trade your way out of 2 or 3 bad months. JD, that we did really well in last year, has pulled back to that last old top, and today it pulled back to that 78% retracement. Can this level hold? But nevertheless, I think somewhere down around here that we can get a high percentage. Even if it is a bear market rally, we could actually make our 2020 20 or 30% in this particular rally, and that would be a really good way to run up into the middle of the year. So I shall be looking at this, but please, it's far too early. The general market is still falling, and one has to have the patience to sit and wait for the market to turn. When the market does turn, ladies and gentlemen, I assure you that that fear will turn into greed in about 30 minutes, but we need to sit and wait on it. I don't mean to sound dogmatic, but I'm just trying to get it across that there's nothing to do on the long side at the moment, and it is my view, probabilistically, that it's actually too late to short into this market. I could be wrong. Games Workshop similarly last week found support at 78%, and there's also an old high which is slightly lower. I would expect it to have broken down below that £50 level today. And Lion Trust Asset Management, 2 lows were in fact a confluence of that old high, and I would expect it to play with this area down here for a little while before turning. So those are 3 stocks that I shall be looking at actively. If it's there's a couple of ways to play this, folks. Those shares that I've spoken about have got excellent long-term charts, and you could certainly have a view that by buying into them at this level and tucking them away forever would be a good buying point, and I think that's correct. But I shall be buying into them if they get up to about, and the whole overall market gets up to about 78% of that level, I shall be watching them very carefully there, because these markets normally will have another go at the bottom. But if we can get this little bit, that would be really great between now and the middle of the year. So there is opportunity, but it's still far too early. Now, the other place where you'll get some opportunity in this market, folks, is by income generation. And I think that you can look at 3 funds. The first one is IUKD, a dividend fund, which is, in fact, if you buy into it today, would be locking in well above a 7% dividend yield. There's another one, UKDV, which I think Carwyn in Wales recommends. And Mark from our Guildford user group, who's one of the 3 gentlemen on the Earnings Per Share Kings, likes a Vanguard fund, which is VUKE. So those of you that take a view that this market is sold off, that it's a good time to put some money away to lock in 7% plus dividend yields, which is quite something, then IUKD, VUKE, or UKDV. Okay. So many ways to play this depending on your own trading plan. I shall be looking to take advantage personally of this bear market rally that I think is just about to start. It could take 10 days, it could take 2 weeks, I'm not sure. We'll have to wait until the front page of VectorVest tells us when. But bear market rallies, very sharp affairs, and then unfortunately the probabilities favor another push down. We could get a V bottom, and certainly the Fed in an election year can engineer a V bottom. Let's see what they do. Let's trade the market. And that is Friday, but clearly that's a long way away today. Friday we had the advances 3 times that of the declines, and that's been swept away today. As you know, the Fed reduced interest rates by 1 point. They went on a vast bond buying exercise. The general market says that the Fed has panicked. So let's see what the market says about it. We gapped down at the open, and as I showed you a second, we did our best to fill that gap, but we're now moving back down again. And that's the VectorVest composite. And similarly, these sales signals during the year didn't come to much, but that one in fact precipitated this huge sell-off, and as you can see, the buy-sell ratio in particular showing this divergence. When the market was rising in February, this going absolutely nowhere. That's Friday's up move, but as I speak, we're trading right down at the bottom of that 2-day range. That's the DEW, again, no divergence on the DPO, and that's the Dow, and we're trading right at the lows of that range as I speak, and that was at lunchtime. The SPX, well, it bounced, and we're right down on that 786 level, and we're trading somewhere down around here. This bottom has to hold, otherwise that 2.6 will go. The next support level is 2.4. If the 2.4 goes, then all hell breaks loose, folks. So if these levels do not hold, we're in big trouble. But bear markets have strong rallies, and I am going to assume a bear market until we have several closes above a 78% retrace of the fall. So let me just go into VectorVest and show you where that would be. So discard all my things. So if I go into VectorVest US and I go to timing, there's market, and the market is broken down, as you can see, the composite weaker, and we've got, we go to a 6 month chart, even a 3 month chart, we put on our fib, and we get a level down to here, and I would like to see a couple of closes up around this area before I'm going to assume that we're back in a bull market. All right. So I think that we can have a fast and a furious rally, but there's no sign of it as yet. And there is the intraday picture on the Dow, and the Dow, in fact, doing its best. It's come back here, and I would be surprised if that low was not a 78% retracement. Not quite. Hasn't quite got back there. There's the 618, and it'll probably come back to this level momentarily before it rises. Is it beating out a bottom? I don't know, and I don't think anybody else knows either. So let's just sit and wait, and the front page of VectorVest will tell us exactly what's happening. But as soon as there is a sniff that there's a bottom in, that fear will turn to greed very quickly indeed, folks. So I suggest that to find stocks, you go to viewers, go to the stock viewer, and resort by RS, and that will bring the highest relative safety stocks to the top of the pile. And all of these stocks have been sold off, and sold off aggressively, and they have a track record of making money over many years, and I think that they can stand a couple of months bad business. So that's how I'm personally looking, and I have some shares that I like the look of. As you can see at the moment, I've got no positions at all. Google stopped at a 78% retracement of the last range. I'm quite sure it's back down a little bit today. If the general market should in fact rally, then I shall be looking at Google. I'll be looking at Dollar General. I'll be looking at D.H. Horton, which is our highest relative safety market. As you can see, it's come right back to that trend line and the 78% retracement. That's really good. Okay, it would be, if you've watched our presentations over the last few weeks, it would be an earnings per share king. Although maybe it's a little volatile on price, but nevertheless, very important support level, and I think that we can easily get up in this to here, for example, in a bear market rally, and that would be a very nice little move. And ladies and gentlemen, that could quite easily be our 2020. Then either the Fed comes in with a big brute of a bazooka and we move up strongly here into a new bull market, but I fear that even under the most positive circumstances, we'll go back and make a rising bottom before that happens, even under the most optimistic circumstances. And of course, the pessimistic circumstances would be a run down till here. Okay. That would be what technicians refer to as a C wave, A, B, and C. Okay, so it's my humble view that we've got a bear market rally on the way. I think that bear market rally in oversold stocks can make our year. It's too early to do anything. All the metrics on VectorVest are strongly down. Sit and wait for at least some green lights before you start to move. Visa has pulled back and found support at that 61% retracement. Again, if the general market should move. And I found those stocks all in 5 minutes, folks, by looking at the top RS stocks on VectorVest USA. Gold, well, gold sold off strongly on Friday. It sold off again today, and I think that this is a corrective wave in the gold bull market, but it's got a lot further to fall. That's Friday's move. Mr. Gann used to call that lost motion. So stay clear of those for the moment. Oil is at a multi-year low. That's 2008, that's 2016, and this is where we're at the minute. So I suggest that you leave oil stocks well alone for the time being. Those of you that are income players, if you buy that Royal Dutch Shell Bs now, it's paying, I think, a 10 to 12% dividend yield. That could be the best place in history to buy them, but if you'd bought them last week at 17 when they looked cheap, you've got nearly a 50% loss in your hands. So let the knife settle before it moves up. That's the RDSBs. I implored a chap that it shouldn't be bought in this area at the show a few weeks ago, and I hope he took my advice. Copper's not doing too bad, hanging in at this old bottom, and a proxy for copper, of course, is the Australian dollar, and it would seem to be hanging in at this 1.618 2.618 extension. I would actually be looking for a nice rally in the Australian dollar, probably to that trend line, something like that. That could be a nice 2-week move. I'm watching that, haven't done anything yet. And similarly, in the oil market, I would be tempted in a short-term trade, which would be long the dollar, short the dollar, long the Canadian dollar, if there is a bottom in the oil market. So to summarize, folks, first of all, I'm sorry that the longer term video of this afternoon was lost. I don't know what they've done, but it is my view that we have got a fast and furious rally just about to start. When I say just about, it could be tomorrow, it could be 2 weeks out, but when it goes, it'll be fast. Until I see a close above 78% of the sell-off, I'm not convinced that we've got another bull market, or the present bull market is still in place, and that the probabilities in fact favor that this is a counter trend, that this is a rally in a bear market. I think that there's a great deal of money to be made by buying into oversold high RS stocks, and I've suggested several in the UK and several in the USA. If the market does turn, I shall be buying into those. In the UK, that'll be an outright position. In the US, it'll be a spread bet as normal, because I spread bet the US stocks through a local London spread betting company. You've all got my email address, folks. If I can help you in any way, give me a shout. I'm sorry again that GoToWebcast lost the video. Let's hope this market beats out a bottom relatively soon. And before we finish, let's have one last look at the US market. There's the US market, rallied a little bit since I last spoke, but beating out a bottom. It is 2 o'clock there. In the last few days, the Fed have come out of the woodwork and pumped a great deal of money into the market in the last hour or so. Let's see what happens today. But all the metrics on VectorVest are down, and if we go to the front page, we can see that 146 are in buys, and most of those are in inverse exchange traded funds. 90% of the market plus is on a sell recommendation, and today 85% of stocks on the North American bourses fell. VectorVest does not advocate buying stocks at this time. That's really good advice, and I think that the minimum that we would want to see to buy into what I believe is a rally in a bear market would be that the pointer is in the green, showing that the short-term trend is up and the strength of the short-term trend is at our back. Okay, I would suspect it's going to take the guts of a week for that bottom to in fact be beaten out. As you probably all know, all our user groups around the country have been cancelled until further notice, and I'll do my best to post a video most days to keep everybody up to speed. Those of you that have done the ISA Millionaire course, there will be a final webcast on Wednesday morning at 1:30. I hope this helped. Bye bye.